Now, do you want another signal that we might be headed into a recession? Fox Business actually talked to Mike Singleton, a senior analyst for Invictus, and here's what he said.
The housing market is arguably the best leading indicator that we have. All you have to do is look at mortgage applications. They're at sort of pre-great financial crisis levels right now. You could look at new home sales down 42% off of their peak in 2020. The housing market looks very, very weak. And the implication is that 6 to 12 months, that's going to flow through the rest of the economy.
So not necessarily comforting, but he is saying the worst is yet to come. How are you guys helping retirement savers get to the other side of this safely?
Well, there definitely is some things that can be done and smart reasons to make decisions. I think, again, one of the things that I would caution our listeners about is making emotional knee-jerk decisions, making a decision like now that the accounts have gone down, going to cash and getting out of the market. Short term, that might, make you feel better, but long term, you have to figure out, okay, when do you get back in, and do you get back in after you miss the rally? And get that double whammy effect. There's things like the protected equity strategies that we talk to folks about. There's things like fixed index annuities that can offer you the ability to participate if the market goes up, protect you against further market losses. So absolutely smart steps to take. I encourage people to step sideways, not get out of the market or step completely back or make a big change to the overall allocation of the portfolio. Because at the end of the day, nobody really controls what the stock market's going to do. The market is going to do what the market wants to do. We recently did a couple events, and thank you for those of you who came out to our Baby Boomer event that we did over at BGSU, and had a great crowd there. We also had an event the previous week when we were in Cincinnati, Ohio, talking to a group down there. I did an unscientific poll, and so I had asked the audience both in Cincinnati and also at our BGSU event, all three groups, I asked the question. I said, well, what do you think the stock market is more likely to do from where we're at right now? And it's going to do one of these things first. It's either going to start the recovery and go back up 20%, or the downtrend is going to continue on and the market's going to drop another 20%. Mm-hmm. So when I asked the audience, and I've asked this question for quite some time, because, again, one of the two things is going to happen first. I think we would all agree that, America and the country, the economy will eventually work itself out. Things will get better. Mm-hmm. The question is what's going to happen first? When I asked all three audiences, it was somewhere between 70 to 90% of the room raised their hand that they felt the market was more likely to go down first.
Wow.
Indicating that they don't feel that the worst is over. And, what's a little bit concerning about that is, with the market, it's an auction. So the more people show up to buy, the higher the prices go. The more people show up to sell, the lower the prices go. And so that could almost be somewhat of a self-fulfilling prophecy. The thing is I would feel that a lot of those people maybe are making decisions based upon emotions. And if you feel emotional right now in this market, I would say make sure that you listen to the rest of the show, because we're going to talk to you about how to keep your emotions in check. And in fact, if you look on the link below, we'll give you some information on our YouTube channel. We talk about how to invest in a bear market. We talk about other concepts to make smart decisions when inflation is high, and help give you that information, because what I want you to do is I want you to try to make a decision based upon the facts. And history doesn't always repeat itself, but it oftentimes rhymes.
Yeah, I'll add a couple of things to that. On a trip to Pittsburgh, I had one of my son's friends, and his dad is an appraiser. And, and I've known him for quite a while, and I said, hey, by the way, how's your dad doing? He says, boy, he's really kind of struggling right now. I go, well, what's the matter? I thought maybe health or something like that. He says, well, he's just not having a lot of work. So when Mike Singleton mentioned there in that clip that the housing market is a true tale of where we're headed in the market still, that's a real life situation where he's just not getting the work. He's not doing the appraisals. The houses aren't selling. Things have really came back on that a lot, so it's kind of a telling tale right there.
Well, I think to me that's one of those obvious things where you see the housing prices, even in our neighborhood. Scott and I both live in the same neighborhood together in Warnerville, and when we were seeing people that were just way overpaying for houses, Absolutely. And they couldn't even get onto the market, you knew that that's one of the signs that you don't want to be the last person to get on
Right.
that. And the same is true, not making an emotional decision, trying to make it based upon facts. I mean, again, if we look at housing, you know what the fact of the house is worth. You can see historical prices. You can use that historical information to try to make a smart decision about going forward. If we look at intra-year declines versus calendar year returns, what that would mean is that on any given year, it's not abnormal to see the market have a pullback, 10 or 15%.
Sure.
Those are normal market pullbacks throughout the year. And then it's also very common that at the end of the year, you can see that the market actually finishes strong.
Mm-hmm.
Well, if we look at it, there's been only a handful of times that the S&P 500 index, and you can't invest directly into the S&P, but using that index as a benchmark, there's only been a handful of times that it's gone down greater than 25%, which of course investors experienced this year. Using that as a guideline would say maybe the worst of it is behind us because, only 2008 and a couple other times like 2000, 2001, 2002, where you had 3 back-to-back years. Historically speaking, the worst of this could be behind us. Not to say short term, there might not be more pain within the market. Now, the other thing that we just got through is we got through this midterm election, which again was one of the great debates. But if you look going back at the results of the market, going back to 1950, you've got a lot of years in there where you can look at the midterm election averages. So the 12 months leading up to the midterms are where, investors have experienced the most amount of pain with market pullbacks. But what you can see is that some of the most positive returns are the 11 months following the election month. So that could say, based upon, again, historical information, there could be some good things to come. But, Chris, I guess at the end of the day, the market's going to do what the market's going to do. Just make sure if you're an investor that you're making a smart, intelligent decision about what to do. I don't want you to get yourself in a situation where you get hurt, and that's absolutely what we're here to help try to answer and guide you through this type of environment.
And if you feel like you need a little bit of that emotional detachment or a little bit of a helping hand when it comes to your retirement plan, especially, if you've endured the bumps and what have you from this year, here's the truth of it when it comes to midterm elections. There's another election coming up 2 years from now, and then another election 2 years from now. You're going to see multiple elections over the course of your retirement. You're going to see probably more than 1 or 2 market drawbacks over the course of your retirement. So, if you can develop a plan in place that's going to account for these and let you have a bit of that emotional detachment, I think that could really go a long way to making your retirement as enjoyable as possible. Again, if you need a little help with that, it's real easy. Pick up the phone, give a call, schedule time to speak with the team at America's Retirement Headquarters, 419-794-3030, or go online to the website, americasretirementheadquarters.com.